Hello, in this quick video tutorial, I'm going to introduce you to the OTG market maker levels. The backbone of what we do here at the Oil Trading Group is around support and resistance ideas, finding locations on your chart where we believe it is the right place to look to make a trading decision. So to that end, we oftentimes refer to these levels as decision points. And that is the place on your chart where we are looking to make a decision. Now, these levels are unique in their nature. They were given to us, taught us by a veteran floor trader of over 30 years. And he used a variation of these levels in his everyday trading when he was on the floor. Obviously, as the market has moved from the floor to the electronic arena, to the screen, we had to adapt these levels to accommodate that idea, but the essence of these levels is still the same. Now, there are three different types of levels that we're going to discuss here today. There are overnight levels that provide structure and context in the overnight session. There are those levels that form based on previous price action and will form after the regular trading hour session starts. And then, of course, there are the third set of levels, which are those that form at various times throughout the trading session. Now, the best way to visualize these levels is to think of those Russian nesting dolls, those little wooden dolls where you have a big one, you open it, and inside of the big one is a smaller one, then you open it, and inside of that is a smaller doll there. And so that's essentially the way that these levels work. So what you're looking at here right now are the overnight levels. These levels, again, provide structure and context for your trading in the overnight session. One of the things that we look at here, just kind of out-of-the-box settings, is we look for first-time touch opportunities of these levels, meaning that when the market gets into that area, you are looking to either get long or short based upon the criteria that are going on around you, and meaning structure and ideas and chart patterns and things of that nature. And so once you are looking to get into an opportunity, you are looking for a zone around these levels. It's nice when they touch it to the tick, but typically speaking, these levels will get to within an area on your chart 2 or 3, 4, 5 ticks wide, and that's kind of the way support resistance areas work anyway. So in this example, I'm going to show you how to really nice chart pattern that would give you a very clean shorting opportunity, right? So if you look here and you say that this is a bottom and then that is a shoulder, this would be the head, this would be the right shoulder, right? And then this area here into your support would be the completion of that right shoulder. And if you were to draw a trend line to form a neckline, you have a very clean pattern that tells you once this level breaks, you would be looking for a move to the downside. And so as the market comes down, this is your measured move, right? That is the top of the head down to the neckline. And you would be looking for a measured move into this area here. Now that line's not terribly straight, but you get the point, right? So that is your measured move idea. So what you would be looking for here is on a short, on a break of this level, and typically what we use on the CL is a 10 tick stop. And so if you looked for a break of this level here, right, and said that is 91, that's 90, there is a 10 tick stop right there. And then you would be looking to target at least 2.5 to 1, 3 to 1 risk reward. In this case, it comes all the way down to the structure mid, which is 25 ticks, and that is a very solid 2.5 to 1 risk reward ratio. So if you said that is the area that I'm going to look for support, there's a head and shoulders pattern. If that's the place you were going to look for support, and you said, okay, looking back into some previous price here, and the previous day, you're looking for price here, it would not be unexpected to see that level hold as the market rotated up and down around that area. And you said, okay, I'm going to take my target at 2.5 to 1 risk reward, and this time I'm going to reverse the position long. That is right here at this area is 65. There's a 55 tick stop. And this time you said I'm going to hang on for the level above. right? That's 25 ticks. But if you said, I'm going to wait for this idea that we call kick the signal and pay the target, there was another 25, 26 ticks to be had. So you had a good opportunity to go to a 5-to-1 risk-reward ratio there. Now, that is what you do in your overnight levels. That's the way you look at these levels from an overnight perspective. Once the market opens and we get into what we call the RT8 session, right, then another set of levels form up, and they are, again, they are the same kind of idea here that we talked about before. And you can see how the market just kind of goes from level to level, right, and finds opportunities there. So let's just take a look. CL's been really choppy here of late, but again, when we talk about this idea of kick the signal, pay the target, again, you've got a couple of decent ideas here. Again, we're looking at the end of summer CL, so these opportunities are going to be a little bit less prevalent. But again, if you said here, right, there's some structure in the market here, right? There was a symmetrical triangle being formed right in there at the open. And you said that if the market was going to break out, you'd be looking to get over the top here. And again, a measured move on this symmetrical triangle. If you just draw from here to here, a break of that area would give you a breakout and up over the top here. And that's exactly what happened. And so if you were looking for a long on the break of that level there, let's call it 70, right? Let's call this 70 as the break point here. Right, just above that level. Here is your 10-tick stop, which of course the market never gets close to, and you are looking for this thing to rally to the next level above. That's 41 ticks, or a 4-to-1 risk-reward ratio. And at that point, the market begins to consolidate, right, in another symmetrical triangle type formation. And so this time, if you said, I'm going to wait, this is just consolidating here, I'm going to wait for the breakout of this level. You had a couple of opportunities here. Let's see here. Let's say you waited for the break of this triangle here. This would have been 03, and there would have been 13 ticks. That might have taken you out to the tick. After it broke out, it did go down to that's 17 ticks, so you could have been taken out of break even here. And let's say this comes back into this. You see that you're in this trend line still, and then you wait for the break here again of this level. And let's say you wait for this time. You could do a couple of things here. You could wait. You could have waited for. You could have waited for this break of this area here, right? At which point you would have been getting in a little bit later than I would like to get in. But that is an opportunity if you wanted confirmation, or if you said, look, I'm going to let this thing come back up. This obviously is going to hold. On the next bar up, I'm going to look to get in. And again, your 10-tick stop from here would have been 10. Probably would have used an 11-tick stop just to get above that level, and maybe even higher at 13 to get above that swing high, 14. And so if you said you had a 14-tick stop and a 2.5-to-1 risk-reward ratio, you're looking for 35 ticks from the entry. And this is going into the close on this particular day. And again, 35 ticks from here would have been down to 65. And again, you really could have ridden it all the way to that other area, that structure mid, for 71 ticks. Now, that is the way that we like to use these levels. But again, you can see that once we got in and around these decision points, you begin to look for some sort of confirmation around those levels. Now, we have another set of levels that we talk about, which are called the revisions. We typically don't use those revisions unless the market has become overextended on a particular day, meaning that this, for example, here you have levels all the way up into above you. These are called extensions, right? And these extensions, once these extensions get broken, then you would be looking for this other set of levels that we call revisions, so that they can provide you with additional structure throughout the session. And you can see here that once you get into your first set of revisions, that these aren't changing because the range hasn't really expanded on this particular day. I think you're probably looking at the same thing. You can see how they're kind of adjusting here as the market rotates through, right? You can see how they were adjusting there. But those revision signals are really used only when the market is extending beyond the parameters of the daily level. So again, if you're past these extensions, and you know what I'm talking about, when you get a move that is one of those moves that is exaggerated, you're going to need to find some support and resistance above and below you, and that's how you would look at those levels. Let's take a look at another chart really quickly. We'll come down here to another popular instrument, which is the ES, and let's turn on the overnight levels here, and let's just take a look here. Again, market opens up. These are your overnight levels, right? Market rotates around this structure signal point. Again, same kind of idea. You start to look for some structure here, right? And you said, well, you got a triple bottom there. You've got a little bit of a trend line. Again, this is a 5-minute chart. There is a bottoming formation. You have a descending, basically you have a descending triangle here, all right? You said, okay, I'm going to look, this market is holding. I want to get down through this area here before I look to get in. And you would say, okay, break of this area here at 13.5. That would, if you gave a 2-point stop, that would be at 15.5, which would be right at the level. You might go a little higher. And then you were looking really for a 2.5 to 1 risk reward ratio. And right there is 3 to 1, 6 points, right down to your next level, right? And that's where you would be looking. So the market begins to hold here. The market begins to hold, and then, of course, you're into the regular trading day, and you can see that, again, if you can't make it to the step above, then you're looking for it to make it down to the step below, and that's the overnight levels. We'll just take these off really quickly here. Let's remove these drawing tools, and let's turn on the after the open levels here. And again, same kind of idea, right? Market comes down. You had some support here in the overnight session, right? Telling you that this was a good place of support. And then, of course, right after the open, that area begins to hold, right? And again, this is kind of sloppy conditions here, but again, it makes it to the level above. And then, of course, you know, we talk about kick the signal, pay the target. And so while you were in this range here, right, while you were in this range, there could have been trading opportunities, and especially when you're choppy like this, selling tops, buying bottoms, that kind of idea. And if you are in up here, obviously the market breaks down and gives you a really good opportunity. Let's take a look at this previous day. Same kind of idea. This is one of those moves that I was talking about, where we would need to use those revision signals. We'll come back and take a look at this. On this particular day here, however, again, as you're leading into the open, you have some structure developing, right, from the previous session. You've got a little bit of a trend line connecting these 2 points here, and then you have a top here, and again, you would be looking, let's just go from here. This might be a little easier. And then this is all leading into the open. So what you would be kind of looking at here is you have some structure up above you. You do have a trend line here. And so this market, as we know, the ES has been on this parabolic move to the top side. So if you were taking a bigger picture approach to this, squeeze this chart in. And again, you can see that this has just been a market that has been moving aggressively, right? This is a market that's been moving aggressively. So you'd be looking, be a little bit biased to the long side here. And so again, as you're coming into this area, market comes down back and forth, right? And so now it's not till you get above this level here and you break out that I would be looking to get long, right, on a break of this level up here. Now, this is a little bit choppy, and so it's why you have stops. So if you said you're going to get long here at 0.1 quarter, then you would be looking at 99 quarter as a stop, and there's your 2 points. There's a stop. Market comes back up, gets back over the top, and you say, well, I'm going to do it again. This time there's 0.1 quarter, and this time 99 quarter doesn't take you out. And you begin to look now for these levels above. So you're looking for a minimum 5-point target, right? That's 2.5 to 1. And if you were to take it to this first level, that's a 3 to 1. And if you said, look, kick the signal, pay the target, we couldn't make it to the level below. We should make it to the level above. There is a, let's see, that's 3 points rather. There's 3 to 1. That's at a minimum the place you'd be looking to go. And if you said, look, I'm going to go a little bit higher, that's 9 points. That's 4.5 to 1. Market rallies up and really quickly goes all the way up into that extension. So you had a 2-point stop if you're playing the break of this formation here. You had a 2-point stop, and ultimately you could have reached out for a 9-point target, and so you would be plus 7 points on a move in that way. Now, one of the things that we just talked about is the revision signals. They come into play when the market has expanded beyond that range. So let's turn off these for a minute and turn on these revisions. Okay, we'll spread this out just a little bit. It's the same kind of idea. Kick the signal, pay the target. All right, so your first revision signal after the open, it's actually when you break out up through, let's turn these back on real quick just so we can get some. So it's once you break this extension level up here that you begin to look for where these revisions will come in. And again, your revision signal, kick the signal, pay the target up above you. We'll turn these off, and that's kind of what you would be looking at. In fact, the market continues this rally, comes back through it, gives you another signal here, another revision, and then that's kind of it for the day as we drift on into the close. And so again, that's what these levels do. They're designed to provide you a structure and context for the different sessions of the trading day, the overnight session, after the open, and then the various periods after that. So one more chart here. Let's take a look at the NQ and see what these levels look like against the NQ. It looks like I was doing a little homework here. Let's turn these drawing tools off for just a moment. And while I don't trade the NQ, we get people that like to look at these levels here. And so again, same idea, right? And we could not make it down to the level below, so we rallied into that level above. And again, if you were looking to at price pattern formations and you were looking at some sort of confirmation that you were trying to get to, you've got a bit of a sloppy head and shoulders here, right to here, to here, whoops, to here, to here, to here, right? And then the completion there. And then you have a neckline drawing here, right? So there's your sloppy head and shoulders. And if you take the top of the head down to the neckline here, then you could bring this down for a measured move. And again, these are your overnight sessions, so the moves are a little bit less precise, but there's an opportunity there. And again, down to the next level. And then, of course, we continue to roll through those levels on the day. Just going back a couple of days, you can see the market's been a little bit choppy. Again, it is summer months. And if you take a look at this NQ here, again, really good, clean, kick the signal, pay the target ideas above you as the market rolls through and provides you a structure and context in your overnight session. So there are your levels. That's the way these levels work. Thank you for watching the video tutorial here, and we'll see you in another video.